How's it going? I'm Ryan. Today, I'm going to go over the three trades I took on MNQ. First two trades were some losses. Third trade was a nice winner that brought it all back and some. We'll get into those in just a second. We'll go over what I was watching to enter the day. So, this is the hourly chart. We're looking at this range that we were trading in for the past couple of days. The two major things I was watching were a rejection off of this zone here from like 375 to 410. Reason being, it was the top of this range where you see, a break and retest to a move down here, a test of that zone here to a large move down, as well as here to a large move down. So that was one that I was watching, potential rejection at the bottom of this range. The other was if we broke above this range for that strength and continuation to the upside. Now, all three trades were shorts. My second trade was an excellent opportunity to long. I think I had a short bias for some reason, even though coming into the day I was looking for longs over this zone. So that was a little bit of a wonky situation. Not overly joyed that I took it. I think, like I said, I just had a bias that got the best of me on that, even though the signs were indicating the opposite, and I kind of knew better. So I was able to take a much better trade on my third trade of the day, and we'll go into each of these, but that's basically it, really. I was watching for a rejection up here since we were close to that, or we were opening right in this area, or a break and continuation to the upside if we get above that zone. Those are really the only two things I was watching. The first trade came in the pre-market. I don't know if I would necessarily really say that, this is something, I suppose. We'll call it a trade because it was. But I only took two contracts. I took really light size because it was in the pre-market. The pre-market is generally a little bit lower volume. And so I've not had much luck trading the pre-market. So at least I took a smaller size. But the idea actually played out, and that was this rejection off the bottom of this zone. If we look at where we're at on the hourly time frame, and you look where we opened this morning, it was right at the bottom of the zone where I was watching for a rejection. However, I got in on this candle in here during the pre-market because I saw us come up and kind of wick off this and start to pull back, and I thought that we would get that rejection before the market opened, or at least have that flush once the market opened. So I entered a short position in here. My stop loss was a little bit above this high that we had. We came up and stopped me out right before the market opened. Stopped me out, and it moved up another 15 or so points. So I'm glad that I had that stop loss. I was willing to take it was a 10-point stop with two contracts. I was targeting at first like this swing low and then down to yesterday's high of day, which would have been about 40 or so points. So about a 20-point move and then a 40-point move for my two targets, and I had a 10-point stop or so. So that was a risk reward that I was willing to take. Like I said, I only took two contracts because I figured that it was a little bit riskier knowing that we were in the pre-market and we might not get the volume to get that move through. As you can see, we did stop. I did get stopped out, but we got that move off that lower zone. So that played out pretty well. And I think maybe this influenced my short bias today. I'm not quite sure, but nonetheless, I got stopped out, and then we got that move down pretty much as I was hoping that would happen in here. So that was my first loss of the day. That was a really small loss. I think it was with fees and everything. It was about $50. I think it was 11 points or so loss with two contracts. So I was down $50 to start the day. Like I said, I was willing to take that risk, and I took it with small size because of that. From there, we came up and set a new high of the day, came back down, retested this previous day's high, held that pretty well, and then kind of started chopping our way up in a channel. You can see that we have this bottom level of support, and we have this upper kind of band of resistance, and we started just making our way up. Once we had this point and this point, these highs established, and then we started making this kind of channel upwards. I drew these two trend lines. That was prior to this rejection and this rejection, which both respected that upper trend line pretty well. And then I had this trend line slightly adjusted because at the time we hadn't formed these candles. So this trend line looked like this. And what I was watching is that we were forming a rising wedge, and that wedge was getting a little bit tighter. And when we broke, so I was mentioning that I wanted to see a break above this zone for a continuation to the upside. It gave us some really nice entries, right? We broke above, pulled back to that 20 EMA, that support line. This would have been a great entry. You could risk it off kind of these lows and target the top of this resistance. That would have been, you know, a 40-point move or so. It gave some nice opportunities to the upside, so I'm kind of kicking myself that I didn't take advantage of that. And then you can see the same thing here, right? Pulled back, held that EMA, even wicked down below and formed a nice like hammer here and here. Either one of those you could have entered off of, risking below this swing low, targeting, you know, previous high. Either one of those were really great setups to the upside, and something that I would have liked to capitalize on, especially because I, going into the day, had recognized that long opportunities, if we showed strength over that zone, had some potential to play out, because we really had no resistance in here. So that's one mistake that I made today, that I admit, and that's one thing that you know, could have made today better had I not had what was seemingly a short bias. So my second trade of the day was a short right here. And I know I just mentioned that this is an excellent position to long it, and it is. I was just on the wrong side of things. Like I said, I think I had a bias. The reason why I took it is because we had this trend line break, but the break wasn't strong, right? Ideally, I'd want to see the trend line break and break the EMA. But the fact that we held that EMA and formed two candles back to back, like wicking below but holding it, this was not great. So my stop loss, I entered 8 contracts. I sized up a little bit, and my stop was hit when we pushed up here and broke above these wicks. So this is a terrible short entry. This is an excellent, I entered right in here, which would be an absolute banger for a long entry. You could risk, you know, at 34, you could risk low a day. That's about, you know, a 10-point stop. That's a nice tight stop. You could target, you know, these wicks up here as your first trim. That's, you know, like almost 20 points. You could risk, you know, or target the high a day for your runners. That's, you know, 30 or 40 points nearly. So I entered short when it was an excellent opportunity to long. And this one is one that I'm kind of kicking myself over because it was a bigger loss than I should have taken. I sized up, and I just, looking at the overall trend, we're trending up. I knew that over this zone we had long opportunities. We held the EMA. You know, we're getting hammer candles, like all that just indicates more strength to the upside. So like I said, I'm not quite sure why I was convinced to take a short position and with increased size at this point. I think I saw this rejection here, kind of bearish engulfing, these having long upper wicks, and then starting to look like we were breaking down, but we didn't, right? We wicked down and held it, which is a good sign to the upside. So that was my bad trade for the day. My first trade, you know, I should just kick myself anytime I take a trade in the pre-market, because I don't think it's ever worked out for me. But it was with 2 contracts and it was super low risk. So that's, you know, I'm not mad about that necessarily. This one is the one that really, like, if I entered long here, that's an absolute amazing trade with essentially no drawdown. But yeah, that was my second loss, and this was the biggest loss for me. It was about $300. Like I said, 8 contracts. I think I had like a 15-point stop or so. So from this point, I readjusted. I went off those lows, and I took a third short. So like I said, I'm not quite sure why I was favoring the short position so much today. But this one did play out, and I actually did have adequate reasoning to do it. So we formed this new high. Then we got a really rapid sell-off. We got a really strong rejection off that high. We formed this candle where we closed strongly below that EMA. And then you see the EMA starting to roll over as well. So the EMA is just a good indication of trend, right? When we're trending up, you see it's a pretty vertical, like that slope to the EMA is pretty strong. Anytime it starts to like roll over or go flat, if it's flat, you're generally experiencing some chop, as you see in here, right? It's like kind of horizontal. We're experiencing a bit of chop. But once it starts to make its way up, that's a good indicator of an uptrend. Likewise, if you're at the top of a trend, we get a strong rejection, the EMA starts to roll over, we're failing to reclaim that EMA. It's a good indication that price will pull back. And then likewise, right, you see it start to roll over to the upside here, and that's the start, or maybe not the start because this is the bottom, but you really start to see that trend change because we get this pullback, we're breaking swing lows. But then once we reclaim that EMA, the EMA starts to roll, we hold it, you see we start to trend back up. Likewise here, that EMA starts to roll over and start to head down, you see we start to trend down. So it's not perfect, take any indicator with a grain of salt, but it does give a good indication, hence the indicator, that where trend is headed. So that's a bunch of blabbering, but I was watching this EMA kind of roll over. I was watching this bearish engulfing, this really heavy sell-off. I watched this Princess candle where we tried to get back above and reclaim it. We closed a very bearish candle, right? Like a hanging man. That's typically a very bearish candle to have, and especially this one here where it closes red. But the message is that once we broke down, retested, closed pretty bearish, I entered on the retest of the EMA here. We kind of chopped around for a little bit. We pulled back a little bit. I was in profit. Where was I targeting? So I was targeting in here for my first trim. It was about 20 points. I entered right here, so like 58 or so was my entry. My first target was like 38, somewhere in here, kind of where these wicks were, where we found this last support. That was about 20 points. I usually aim for about a 20-point trim on my first trim. My next target was at the bottom of these wicks, so like somewhere down in here. And then ultimately I was just going to leave a runner after that point. So like I said, we looked pretty bearish, entered here. We did get a little bit of a drawback or a drawdown, right? When we kind of bounced and then started to push higher. This made me a little nervous, I'm not going to lie. But the plan was to cut if we really started to close above this EMA and look strong kind of over these wicks here. So once we closed this candle bearish as well, right, we had 2 tries to reclaim that EMA, both times printing a nice bearish candle. That gave me a lot of confidence to stick in this trade. So this candle didn't really bother me too much. From there, we got that flush down, hit my first profit target. Then we kind of chopped around. This push back up made me a little nervous, but like I said, that close, that long upper wick, felt good about it. Just set my next trim at the bottom here. We came down, hit my next profit target. I took 10 contracts, I should mention that. So I did size up on this one. I sized up. I felt good about it. I'm glad I did, because it's allowed me to have a profitable day by having a little bit increased size. But yeah, I took first trim around this swing low in here. Next trim, so that was 5 contracts. Then I took 3 off here. So that's 8 out of the total 10. I had 2 remaining contracts. Once we came back down in here, kind of towards this zone, I took my 9th contract off somewhere in here, because that was about a 40-point move. And then I just left one runner. And my runner, I put the stop loss just right in here, kind of above this swing high. So I put my stop loss here is about 18 or so point, almost 20-point stop loss. And then this candle pushed up and stopped me out, which is good because we reversed from there. Like, this is the bottom, and then we got that change and continuation to the upside. So this trade played out really nice, and you can see I made $148.20 today. Prior to this, I was down like 350, right? I lost about 50 on the first trade, 300 on the second. So overall, this was about a $500 profit. But with those previous losses, ended up being about 150 profit. So kicking myself for taking a short position here. because that is an absolute beautiful trade to take. You know, we come down, form a hammer on the EMA, we're trending up, we have strength to the upside, we don't have much resistance above us. I just entered short when I should have entered long, and that would have played out really well. You know, we have a clear defined stop loss below the swing low. Yeah, that's something that I could have done a lot better. And so that's the one that I'm kind of kicking myself. Rather than a $300 loss, that could have been a $300 win, easy. And then that paired with this, you know, that could have been close to $1,000 day profit had I just not had the bias and instead just read the chart as it was presented to me. But that's it. I was happy to have this last trade play out pretty nice. Secured a win. Kept, you know, had respectable stop loss, risk management, had defined targets that were based off of previous price action. Yeah, so I'm really liking using this EMA. It's not perfect, like I said, but whenever you get like hammers holding it in an uptrend, or you know, you break through it and you get these like hanging men candles, you know, trying to reclaim it but failing, it's usually accurate, you know, enough times to be a profitable part of my strategy. It's not my entirety of my strategy, but it's at least, you know, a good addition to it. But that's all I have for today. I was happy to bring it back on a positive note. Started this new account. This is account reset. I blew my account Tuesday. My previous one failed the Apex Challenge, reset it. So this is the first day trading on the new account, and we start off with a green day, moving in the right direction. But thank you for watching. I trade live Monday through Friday. I'll be out next week, but other than that, regular schedule. Appreciate you watching. Hope you have a great day. Peace.